Hello everybody, it's me the Boss Hog, and today we're going to be looking at my stock portfolio and how it did over the week ending the 23rd of July. Let's do it. Alright, so it's a pretty wild week, especially for my UK stocks. On Monday, I got honestly hammered. My highest ever loss on a single day of £1,800. That felt pretty gross, especially considering if you saw this video from last week, I made a loss on every single day last week. Tuesday started to show some life. Tuesday more or less evened out. I wasn't quite sure if it was going to be plus or minus. The US stocks were recovering really nicely. The UK stocks were kind of getting there. And then the 21st, all the UK stocks caught up as well, and you know, I had a relatively pleasant finish to the week, I suppose. So that was pretty interesting. I continue to add £160 a day across two different investment accounts known as ISAs. I did also add a further 3,000 from the bank. That pretty much maxes out my cash. We do have another sort of 20,000 in cash, but that's basically our 6-month emergency spend kind of reserve. I actually am in the process of starting a new job, so I think that's especially important to not go any further than that unless, you know, the market goes down 60% again or something. So broadly speaking, I don't think I have too much cash left at the moment, but I'm just going to still be adding £160 per day moving forward, so that felt pretty good. What felt less good, I guess, was that there were no dividends this week. I mean, I haven't done it deliberately, but April, July, October, and Jan are just quieter months for my dividends. So, you know, if anyone's interested in watching like portfolio review, you'll kind of see that cycle has a slight dip compared to previous months, just the way it seems to have happened, basically. So, unfortunately, no dividends this week, but what can you do? I guess let's have a look at what I've been buying and selling over this week. Alright, so here is my list of everything. You'll see at the bottom here, this matches with the 8515 from the previous. Remember, as well as depositing 3,800, I also have, you know, sales basically from shares that I then reinvest as well, and any cash that's left over, although I don't tend to keep a ton of cash to hand. The main call out here is Fevertree. I got to time this slightly better, and I was a tad bit annoyed because I put in a fairly large order for like 50 shares, 22.82 I think it was, and then it randomly just went up 2%. For anyone who doesn't know, Fevertree is a consumer discretionary drinks brand, specifically for alcoholic drinks, and it started life as a mixer for gin. It's trying to diversify into other mixers, and it's trying to go into other markets. This is the third time actually in 6 months that they've published quarterly results, and basically the market didn't like them. I spent some time reading them, and actually I was fine with them. Yeah, sure, margins are under pressure, but everything else actually is looking better than expected. Revenue's running ahead, growth in the US is looking super, growth in Europe is looking super. Off-trade sales, so that's direct, you know, retail sales, is looking super and holding up better than I was expecting. So, you know, although it is still an expensive stock, this is sort of at 45 PE, even at this level. I'm really happy to own it. Currently, I'm more or less breaking even. I think I'm down about 0.5%, but this to me was a great opportunity to add a big stake of Fevertree, which is what I chose to do. Other call outs here. So I've got Sentiment. I have owned this before as quite a small stake and decided to buy a pretty reasonably big stake. It's about 1.5% of portfolio value, just under. Basically, I decided that a combination of really great dividends, they're kind of diversifying into other regions. They've still got a really great quality mine in Egypt, and you know, they've kind of got over some of the issues, and it was a bit of a value play. Similar actually for Telecom Plus and Energy Transfer. Energy Transfer I timed super well. It's another stock I've owned beforehand, just couldn't turn it down at the $9 level. And likewise with Telecom Plus as well. Literally on Thursday night, I spent some time reading, you know, latest results and everything else, and I still think that the market isn't really valuing them. I would say this actually for quite a few sort of FTSE 250 and smaller telco stocks in the UK. Phoenix is another one. There's African Airtel as well. There's quite a few that kind of look pretty interesting. I'm already on Telecom Plus. I'm actually down about 10% on my stake. So for me, it was a good chance to average down. And I'm, you know, I think having read, you know, spent about an hour and a half digesting stuff, I'm really happy to buy that still, so I did. I sold quite a few Apple last week, 15, so I was buying back in 9 of those 15 with a $2 profit on each. That really wasn't the main reason for me selling them. It was to buy Genie like $15.30, so I'm still quite pleased that I did that, but I still think Apple is a quality company, so I'd like to get back into it. And then the other call out here, or one of two more call outs, is Aviva and Epd. So Aviva is a UK insurance company. It was a bit unwieldy. It's kind of one of those companies that's technically about 400 years old, but it's kind of lost control of itself over the last few decades. New management as of about 18 months ago, consolidating, simplifying the business. They're sitting on a lot of cash at the moment. Everyone's hoping for a special dividend, including me. Even without the special, though, it's yielding over 5%, and it's a perfectly solid company, especially now it's streamlined. So I'm delighted with that. And EPD is my dividend powerhouse, also because it's a MLP. As a British investor, I don't have to pay any tax on it, which is fantastic because it means the 7% and a bit yield is completely mine. So that's great. And I also don't have to fill out a rubbish form either. Whatever's required, my brokerage takes care of it. So I decided to buy that on a bit of a pullback as well. And lastly here, I decided, likewise, Amazon had a modest pullback. I was actually in for Amazon at like 32xx. So I decided to take the advantage on a minor pullback to average up slightly. Picked up a quarter per share, which now means I have 1 share of Amazon, which feels really good as well. The rest of it's there. I think the only other one I'd want to call out is actually Huntsman Group. They're publishing on Friday, and I also spent some time on Friday night, just gone, reading up on them. And again, I'm pretty bullish on Huntsman. I think I'm gonna be spending some money on them next week. They're definitely going to be getting some love, and I'm super optimistic about what I'm going to hear on Friday. I think the market's just not recognizing them at all, and I really love the direction that they're moving into in terms of focusing on higher margin businesses and etc. So just a small buy this week, but I'm looking to add to what's already, I think, a top 3 holding for me in Huntsman. So just to call that out as well. All right, let's see what I've sold. Okay, so maybe a bit controversial here with my Microsoft sale, and indeed Danaher. I think these are 2 really quality companies. They're very different, but I mean, I think everyone knows Microsoft. I just think, it's run up pretty far. I mean, to be fair, it still added a couple of percent even after I sold it, so that was, I guess, a bit disappointing. But again, I'm happy to pick up other shares and crystallize a win. Danaher, likewise, I think this is a company we stumbled across by accident, but I do think it's a really quality company. But again, so crazy expensive, so we'll see. So I decided to take some money and redeploy it, but I have stakes still in both of them, and I will think about buying any opportunity. Pets at home here. This isn't Pet Mad Med or whatever it is, because I know the US has a pet stock ticker as well. This is the UK Pets at Home. I like this company. It's done super well. I mean, I use them myself for my pet hedgehog. It's a really well integrated, smartly run business. It's just done great during COVID, but as a result of that, I think it's run up plenty, and I decided to take what was effectively a 20% profit on this company and sell out at 486, I think it was. I mean, when I was buying at 420, I was already thinking it was like, yeah, okay, it's a good company, I'm prepared to buy 420. Then when I went to 450, I was already thinking, yeah, it's starting to look a bit expensive. So by the time it got to 488, I was like, yeah, I'm done here. So sold out of that, no regrets at all. I will happily get back into Pets at Home, but not at 420 because, sorry, not at 480 because basically only good news is priced in at the moment, and I would target 420 as my kind of rethink of that. Macerich here is a recovery stock. Again, this was a 25% profit for me. I do think it still has potential to run up, but I've realised over the last couple of weeks, especially with some of my UK holdings, that I'm still a bit overly indexed in recovery stocks, and that was kind of making me feel a bit uncomfortable actually. If Delta or COVID 2.0 does spike again in winter, I sort of decided that to get rid of Macerich, so I took the profit. I would consider it again. I think it will recover, and I'm bullish on the shopping centres. So there's that. Yeah, and then last but not least, this is EPD, which I know I said is good, and I just had a rounding that I wanted to fix. I'm kind of slightly OCD, I think, and I hate, or occasionally I want to tidy up the 0.7345, etc. So I just sold out 0.06 just to give me a nice round 350 numbers. Okay, let's move on. Okay, no dividend this week, so straight on to best and worst performers. Let's start with the worst of the worst, which was Fever Tree, down 7%. You can see there when the results were published, I think, quite clearly. It does tend to react quite aggressively to either good or bad news in the results, or perceived good or bad news. Like I say, I had a read of the results and my reasons for being in them and my justifications in a kind of dedicated video I have that I guess I should link in here, was that you can justify Fever Tree price if you believe that they will be successful with additional mixers, successful in additional markets, or successful with off trade. And actually all three of those numbers were better than expected. So for me, the fundamental reason for owning the stock actually gets boosted. So again, for me, good chance to buy. I'm happy to do so even at very high multiples. I think it's got huge potential as a business and a brand, and actually quality products as well. So great for me. Next up was Polymetal. This is actually one of my defensive hedges. I was already quite willing to buy under sort of 1600. The fact is now under 1550, and I'm sitting on a small loss here, about 1%. Again, is potentially I'm going to be buying more of this next week if Fever is not available, and one or two others as well. So I'm fine to buy this. My medium-term aim is to get to a 5% holding between Poly and Sentiment. I'm currently about 4%. This is just to give my portfolio a hedge, basically. So that is, I'm fine buying more. And this is Telecom Plus here again, 4% drop. It does have some results coming up soon, and I'll be keeping an eye on that, of course. But to me, I just, I work in telecoms, back-end systems. That's where all the magic happens with this company in terms of consolidated cross-selling of utility products. And I still don't think people are realizing the benefits that's going to bring to this company. It also has a pretty nifty sales model in terms of what they call partners, I think they're called. But anyway, it has like a sort of a sales commission, similar to like old Avon type stuff. But again, it has, like, when you look at the differences to people who bring in their friends and families into the business, they have longer contract values, longer contracts, high contract values, lower churn, just like the numbers that I really like to look for in a utilities business. So again, for me, I added quite aggressively to my stake this week following that. So I'm actually fine with all of those drops, honestly. Next, then, and to finish up, let's have a look at the best performers. This is National Express, arguably a dead cat bounce, but as I said last week when it was my worst performing share, I'm super bullish on National Express. I think it's been fundamentally misunderstood as a COVID stock. Kind of get why you would think that on the surface, being travel, but it has very little international travel. It's within countries, so it's in other markets, but it's in countries, and more than 50% of its revenue is secured. It's renegotiated all of its contracts to look at mileage rather than passengers, so it's not going to have any hangover there, and it's turned itself into a much more efficient business over the last 18 months. So I'm kind of like really bullish on National Express, and I would still maintain it's about 50% undervalued. So again, I will be looking to add to this on any additional tip. Basically, would be a win for me. Next up, we have one of my smaller holdings, which is Blue Prism. This is kind of an AI company. It has been on a slide really for many months. I'm willing to buy this under about £1. And yeah, sorry, under £10. Sorry, it's about 8 at the moment. I just think it's an interesting business. It's kind of specializes in automation and improvements in other businesses. So it kind of is cool, and I've done a little bit of work with them in the past in a professional capacity, and I was very impressed with what I saw. So again, this is a bit of a gamble. It's definitely on the higher end of the risk tolerance, but it's a nifty little business, and it's got some potential. So again, I've just been averaging down. I was buying one stock a day in this just to build up the stake really slowly. Over the last couple of weeks, I found other things that tempted me a bit more, but that will be my general strategy moving forward here. If I don't see anything else worth buying, I'll just put £1, £10 a day into Prism, basically, Blue Prism. And last but not least is mining stock. Again, I find myself at the moment on the more optimistic side of investors and analysts, and I keep buying recovery stocks, which I'll include, as well as the traditional recovery stocks, things like mining. Anto has had a bit of a slide, having run up massively. For me here, anything under 14.50 is a buy point. I am up on Anto now, and actually I'd like it to come down a little bit more, ideally. Yeah, even at £15, I'm kind of tempted to keep buying, but 14.50 for me is a bit of a steal. It yields okay. I think copper is super important. It's a good quality company, and yeah, I'm fine buying more, basically. Again, pretty small stake at the moment because I didn't quite know when the slide was going to stop. I feel like I actually timed it quite well, which is sod's law that I didn't go in a bit harder. But again, here, because I'm quite exposed to UK recovery stocks, and I'll include mining in that as well, I'm kind of trying to build this up a little bit more conservatively. So actually this week, positive positive overall, up very slightly. I mean, I outperformed overall, but because of how my UK stocks are set up to be mainly focused on recovery, my performance tends to be about times 2.5 whatever the FTSE All Share does. So if it goes down by 1%, you know, I'm going down by 2.5. If it goes up 1%, I'm going up by 2.5. It's kind of interesting. That's not deliberate. It just seems to be how it's done. And that was again part of the reason why I decided to sell Macerich and kind of tweak my strategy slightly in how I was approaching these shares. Anyway, I definitely overrun by 10 minutes. I thought that because I didn't have any dividends, I would have a chance to talk more about other stocks, which I guess I did, but definitely missed my 10-minute target by some way. Anyway, any questions in the comments, and I hope you found this useful. Otherwise, I've been the Boss Hog, and good luck with your investing.